Amanda, what do you ask to determine whether you think a company is going to be successful?
I ask a lot of questions. It depends on the specific company in question. One of the things that I think a lot of people forget to ask is what the capital structure of the company is. If you have millions and millions of shares on issue, or you have a huge amount of debt or hidden debt that's going to come out of nowhere, or options or warrants that vest at different points, you can blow out the capital structure of your company. And in that situation, your investment will not perform as it might otherwise have done. Mining companies with too much debt, a proportion of debt that's way too high, and what high is depends on the circumstances. That means that a lot of their profits are going to go towards paying back that debt, and are not going to flow back to the equity markets or retail or regular investors, equity investors. That capital structure is one of the things that I think the general market misses most often.
So these are like the giveaway clues, if you will, that you might spot that the average retail investor may not.
Yeah. Good old-fashioned check the balance sheet is one of the best rules you learn when you're a professional fund manager. You can give all of the reasons why you think it's strong and resistant and in the proper commodity market and everything is coming together. But if they have too much debt or too many warrants outstanding, or there's so many little things on the balance sheet that can really hurt a company, fundamental things that are often overlooked that can play a huge role determining the success of the company going forward.
Is this accessible to the average retail investor? These days there's so much more information than even available on the internet for free a lot of the time than there was 10 or 15 years ago. Has the average retail investor got access to pretty much the same information as you have?
A lot of it, yeah. When it comes to information, definitely. You can, the most recent accounts, the shares on issue, all of that information is available both on the company website and on the LSE website if it's an AIM stock or something like that. What I have available to me that the average retail investor doesn't is I can apply expertise in the area of geology and engineering to know whether or not a project's viable. Every mining company CEO in the world will tell you what they're going to do, but whether or not that's realistically feasible based on engineering and geological constraints, that's something that the average retail investor often gets wrong and sort of gets sold that isn't true. Checking out the background of the management is something that's more accessible to an institutional investor. But the pure analysis, the balance sheet analysis, and that kind of stuff, it's all available. Unfortunately, I find that retail tends to buy on sentiment more often than it buys on doing. Retail doesn't like doing that much homework. It actually takes a really long time to do proper analysis on an individual stock that isn't something that someone who's investing part-time as a shall I say, hobby or anything else. Who, if it's not your full-time job, you're probably not going to do the amount of work required to make a proper investment.
And another edge that you're going to have is you can actually go and visit the site, I guess. Do you actually go out to some of the geologists in you, or go out and say, actually, I want to see this site that you have? Because so you can pick up so much by actually being at the ground level, can't you?
Definitely. I don't want to claim that I visit every mine that I invest in, because I absolutely don't. But I make a habit of going to 2 or 3 mine sites a year at least. It keeps you current. It lets you know what new technology is on the market. It reminds you of all of the little things you have to check. Like, do you have a happy workforce? Does the community here actually like them or not? All those little things play a role. There's about a million, not a million, but there's a number of things that can stop a mining company in its tracks. one of the more famous ones these days is a community that is not responsive, a company that hasn't sufficiently engaged with the local community. And the local communities have a lot of power, whether that's Africa or Canada, to stop a mining company from digging a giant hole in the ground. And they will stop a company in their tracks. So the management of community relations is increasingly becoming a more and more important thing to a mining company.
And you can't see that information on a balance sheet.
No, you absolutely
And
can't.
that's one of the other edges that you have, that no retail investor, with however much time they put into trying to research a particular company, they're not going to get that tangibility, that they're not going to get that final piece in the jigsaw by actually being able to go to a site and actually see what's going on the ground.
No, absolutely not. I mean, there are little ways, there are tricks I can give you if you really want to do your homework. The local papers are often online these days, and you want to look up the sentiment towards that company in the local papers, not the blog sites, which never know what they're talking about when it comes to that kind of stuff. But if you get to this small local paper in Timbuktu is really a place. But if you get to that small local paper, you might find reactions to the mine that are very different from what the CEO told you the local community says. One of my bugbears about mining companies is, according to every mining company I've ever spoken to, they're in a poor community and they're providing much needed jobs, and the local population is absolutely thrilled to have them. I have never seen a miner that doesn't tell me all three of those things. Maybe 50% of the time that's true, maybe.